Play the music. Let's get going on Capivision this week. I want to start right here. News is breaking today. Russia switches off Europe's main gas pipeline until sanctions are lifted. Putin calling out the, quote, collective West to lift sanctions against Moscow over its invasion of the Ukraine. This is nuts. This is going to impact markets a ton, obviously. We'll see how it goes. Moving into a short week next week after the Labor Day holiday today is going to be a wild ride. So let's put some analysis down. I had a look at natural gas today, and what I saw was just a pretty clear and solid motive wave, and I show that in this yellow channel. There's a couple of consolidation phases. I have those outlined in white here. They are minute waves, and my charts are all color-coded at this point. So if you see a yellow color, you know that's the bottom of one of the tiers of degrees in Elliott wave analysis. So it's always going to go yellow, blue, white, yellow, blue, white, yellow, blue, white, subminuette, minuette, minute, minor, intermediate, primary, cycle, super cycle, grand super cycle. Okay? I'm getting the hang of that, so I hope you are all as well. I do know that a lot of you are learning Elliott wave analysis, and it's awesome. It is fantastic. That is exactly what I want to see. And even though my YouTube's losing popularity, I get that I'm just being a total ass a lot of the time. And that's just a lot of frustration. So what I'm going to do is I'm going to scale it way back. Instead of trying to extend myself into a position where my channel becomes more than analysis, it's just going to be pure analysis, just pure analysis. And Capivision may be the only posts I'm making. And I'll share some of my charts in the lounge, but more than anything else, I'm just going to be taking a step back as I start a new job, and perhaps I'm going to take some classes too at my community college. So I'm going to keep the analysis coming, but just my Capivision subscribers are going to be getting the full analysis. With that said, let's go ahead and just move on in. I'm looking at a 5-wave motive wave, and I'm thinking that we could be at the top, which may now not be the top because, well, we're going to have this massive 5th wave extension. So let's talk about this last impulse wave, this 5 wave, and how it extended in its 3rd wave. So I have that shown here. You have the bottom of minute wave 4, little push up into sub minuette wave 2 or 1, and then 2, and then you can see that, and this is important, that the dip that came here on a closing basis was above the low of the prior dip. So that means it can qualify as a 2nd wave, which I've done. So sub minuette wave, or minuette, or yeah, this is a, what is this? Minuette wave 1, 2, and then sub minuette wave 1, 2, and this is now all pushing up into 3. And there's actually 1 wave degree smaller. When I make these charts, I don't consider those things. I just try to capture the big picture. So I could bump all of these degrees up 1 level superior, but I just don't even bother to count the smallest waves. But if you were to count this out, this extended 3 wave that crosses the channel, it would be 1, 2, and then another extension of 1 of 3, 2 of 3, 3 of 3, 4 of 3, and then 5 of 3, and then 4, and then 5. So wave 3 ends somewhere around here. It's just convenient for me to put it up at the top of the channel and just leave it and say, hey, we had a 4th wave retracement through here at some point. And again, I thought this might be a running flat where you have A, B, and point B extends beyond the beginning of the pattern. And C, which actually came and dropped below the bottom of wave A, which is, this is a, it's a fun pattern. It's really hard to understand what's going on when price is doing stuff like this. You can't even chart a pattern into it. It's just running around. Very volatile. What we do see, though, for certain is the development of an ending diagonal triangle in wave 5, and that is a pretty good sign of reversal, which we did get. And this drop into minuette wave 4, this is a motive wave, which drives me nuts. But that just means that this is the first leg of that correction. And so that would be A, B, and then C would be down here. But here's the thing. We didn't get it pushed lower, so I just had to call this 4. And it's okay. Just, I guess a single motive wave heading down can be a full correction. There's no reason why that can't be. It's just like an oversimplified correction. And maybe if I hunted through here, I could come up with some weird, complicated zigzag. But the fact of the matter is that this drop fits in a channel really well, and that makes me think it's motive. And so if it is motive, that's okay, because the relative direction is down and it's motive. So it's okay. Then we have another motive wave heading up. And so I had to call that top of wave 5, and that would create a truncated fifth wave signifying the top. And we're looking now for that correction. This wave higher, this completed our minute wave 5. So I'm looking for correction A, B, and C on that minute level. And you can see that it looks like natural gas did find a top up here. These are some nice pipe tops, and there was a confirmation close here. That close confirmed the pipe top. And it's not real, it's a sloppy pipe top, it is, but the concept there is the same. And we start to see the price melting down, and it looks like the RSI is coming off of and breaking away from that overbought level, so perhaps heading down into oversold, and volume decreasing here as we move through this corrective phase. Implied volatility is just kind of flat. So what I'm thinking now, though, is because Russia is going to limit the supply during a high demand season, or as we approach a high demand season, this could very well just become an extension. So we have 4, and then we don't have 5 yet. We wouldn't have 5 yet. So I'm going to go ahead and just relabel this, assuming that we are moving into an extension. And so I would have to get rid of all of this, just delete it. Delete it, delete it. So 4, and then guess what? We're coming back into these subminuette waves. And this is where I shoot myself in the foot all the time, starting on a subminuette wave, when I should always be starting in like primary or something. I just like to start at the bottom, because if this is going to be the first wave of minuette wave 5, then I think what we might have is this is a 3, an extension here in subminuette wave 3. And so in that case, I would need 1 degree smaller to show a bounce here. Like, just assuming that we get a big push higher here, and this becomes an extended 3 wave. I don't have the degrees of to express that. So I might go through and just change all of this and mop all of it up. So the subminuettes become minuettes, the minuettes become minutes, the minutes become minors, and the minors become intermediates. But I'm going to leave it as it is and just say, hey, you know, this thing could explode. And if it does explode, wow, outside of log scale, doesn't that look terrible? How would you chart that outside of log scale? That's why I use log scale so much. I think it's way better. If we do get this big push higher, yeah, we're probably going to overthrow the channel for sure. And we'll probably be looking at some sort of incredibly steep like wedge like this. And then we'll be looking for the retracement of that overshoot to be that overthrow to come down to wave 2 of the extension, the bottom of it. So that would say we'd be coming back down to 7.7. And that would be a very volatile thing, right? So Russia causes this huge push higher, and then guess what? For whatever reason, the conflict over natural gas is relieved, and the supply returns, and then we can look forward to the price dropping back down. What this does mean, though, is that the price of natural gas is probably going to stay elevated for a very long time. In the past, we have seen higher highs up towards 14. And we aren't there yet, but that's probably a pretty good spot for the peak of this next wave to occur. And when I'm actually zooming out on this time frame, I get a little nervous because I've said it once and I've said it again. When you get patterns in the RSI, there is something to look out for here. If this does break out higher, oh my goodness, it will be incredible to watch this thing run. I'm not going to be investing in it though. Nope, no way. I just have ethical concerns over it, so I say no and I move on. Let's go on to SPY. Now, I did recently put some analysis down in the server, and I want to open up that chart actually, because I was pretty proud of it. Let's go to auto zoom, and then this is on the wrong time frame, so let's get that going correctly. And okay, that looks pretty good. So to build this chart, I considered how I draw construction details, And then I said, well, why can't I do that on a chart? And so I did. And so you're going to see up top, I have my dimensions, so to speak. This would be like my braced wall line 1, 20 feet, 20 feet, 30 feet, whatever. But instead here, I'm using that length of time instead of like a measure. And I'm using this to describe what phase we are in a measured move down. So the measured move down is really cool. It's a 1, 2, 3 pattern. It's a zigzag. And what's super cool is inside of these zigzags, you can get little zigzags. So check this out. I'm going to do something. I'm going to go 1. And you probably already know this if you're a Capivision subscriber. But if you don't, this is for you. And so sometimes you can get these little zigzags inside of these bigger zigzags, and that forms that first leg, right? And this form is what's called a complex zigzag. And that's what we're looking at right here, is we're going to find that inside of each leg of a larger measured move down, you have another little measured move down. And this happens as you have extending motive waves pushing lower and lower. And that can occur between waves 1 and 3, or 3 and 5. So I have a couple of Elliott wave counts running right now, and I won't go into those now. I think this is probably the best way to look at this, is in a corrective mode, because this is the great correction. It's the great correction. We're going to take out all of this fluff, all of this greed, and it's going to be a bad time, and there will be pain. There will be pain. Let's have a look here. So let's just run through this. I labeled the prevailing downtrend in red, and that comes off of the all-time high and just connects these peaks. And a while ago I was saying right here at this third touch point of this descending broadening wedge, Bulkowski would indicate to enter a short position, which of course would be tremendously profitable at this point in time, having dropped from 431, which I called the top of my everything rally. And now I'm thinking maybe that actually the everything rally hasn't begun yet. The everything rally will start at the next low. But nonetheless, I called the top of this run at 431. Now we're finding ourselves down below 400 again, which is very bearish. And this last week, a couple of Fridays have been really bad. And the daily RSI isn't even oversold yet. And we actually have some little volume spikes down here that make me think this could sustain another downtrend. Another downtrend, in which case I'm going to be drawing another corrective or another downtrend here. I'm going to label this in red. I'm just going to make it really small. I mean, okay, and so we'll be looking at 1, 2, we just had 3. This little bump up here could be 4, and we're looking for 5. And because 3, the amplitude of waves 1 and 3 are relatively the same, I'm going to say that wave 5 probably wants to extend, and it is absolutely targeting the last low. And that makes sense because we did have a rising wedge through here. And the price target for wedge is always the start of the pattern. And so that would lead us back down to 370 or 360-ish. And then that's the first, I believe that's the first realistic opportunity to see a stop. I don't think we're going to see a push and a rally higher at this point in time, given what Russia is doing with natural gas and how that's going to impact energy costs in general. Because that's going to elevate CPI. And as long as that consumer price index is rising, people have less money to spend on other things, and the consumer economy of the United States suffers. So on the 13th, I think we have CPI data coming out. We got some Fed speak on the 21st and GDP at the end of the month. So we do have a series of economic data and news events in September, which is typically not the best time for equities, as I understand it, that could push or encourage or exacerbate this push down. Now, those news events aren't going to cause the push down, but what I'm seeing is an environment in which I would expect to see equities continue to fall. And we'll talk about how far I think it could fall if we do get continuation. We won't know if we're going to get bearish continuation until we get down to these lows and test them. I do believe, though, that the price is targeting these lows, and we will see those tests occur in the near future. I would love to see just the biggest red bars you've ever seen in your life. Just seriously, seriously, the biggest red bars you've ever seen. The faster and the harder this thing drops, the sooner it'll be over, and the better the gains will be on both sides. I keep saying that. Let the floor fall out. Do not hold on to this. That's me talking to the ambiguity of the market. I don't really care what anyone does, but in my opinion, if you know collectively, if we could self-actualize, we would say, oh yeah, okay, yeah, I understand that everything is overextended, and I'm just gonna, yeah, I'll help end this quickly. But I think what actually happens is that as a collective, we don't have that level of intelligence, and so we have these low level instincts that compel us as a society, and that's going to be fear. It's going to be fear. This is the scary wave down. In a measured move down, you have 3 waves, A, B, and C, and that C wave, that's the wave where people start to freak out. And I think that has to do with the having first found some comfort in that second leg corrective bounce, and losing that comfort, all of a sudden you say, where's the support? How far down can we go? And let's talk about that too. So I'm just going to keep running through this chart and breaking this down, because there is a lot of information here, and you're just going to have to like filter with color. And if you're colorblind, I'm sorry, I do my best. So I do have these arrows pointing directly to the things that they represent, and so that should help clear it up as well. Okay, so in purple, the Fibonacci levels of the first wave of the larger measured move down leg. Okay, labeling might be a little confusing. So I'm talking about this purple leg right here. This measures the first, or the larger measured move down. And as you can see, there is a measured move down through here, right? So right now I'm pointing at this guy right here, this blue line. That is the first leg of the larger measured move down. And I have that shown in purple. We have in blue, oh, I'm sorry. See how I do this? Okay, so I did purple here and it's blue here, but this blue is actually the smaller one. So when I was doing this little example up here, I was thinking about my Elliott wave counts, you know, and how I use yellow below. I'm just going to delete this. This is confusing now. Bye-bye. Bloop, 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 bloop. Those colors are confusing, so they got to go. Okay, so yeah, the larger is in purple, and then the smaller one is in blue, and you can see that this measured move down has actually completed, and it completes at the end of the larger one. So that's that first measured move down nested into the first leg of the larger measured move down. I think that's pretty clear at this point. And so what I've done is I've measured the height of that, and these aren't like dirty drawings. These are, I take these down to the penny. So I find the high of this candle and the low of this candle, and then I put down those levels. So this corrective phase through here, this bounced up to about the 23.6% retracement level at $463 before turning down. And this was spectacular because this reminded me of the run in AMC to 34 and also the run to 2750. Because what I actually did is I went and looked at my AMC analysis in the measured move down fractals, and I figured out that the same principle, the same analysis was applying to SPY really, really well. So let me just let me go ahead and go to YouTube, and I'll show you which video that was. Let's go to my channel and go to playlists here, and I'm putting together. It's called Cap's Best Analysis, and so the point of this playlist is just to kind of like put together a spot where I can find the stuff that I want to talk about. Like I called this, so this one right here, AMC Technical Analysis, March 26th, 2022. I spend a lot of time in this video talking about these measured moves down and how they form. And so you can see I have a lot of trend lines here, and I go into, this is kind of a funny video because I talk about how we aren't going to get back into the 20s or 30s until we break this level of resistance, and we did, and we did run up there. I was just like, I don't think it will, but it totally did. At least the analysis supported that run and did call the tops correctly. I'm totally blazed in this video, by the way. So let's see here. I do get into it. I start breaking down how there's 3 phases in these measured moves down, and what I'm doing is I'm identifying instances of bullish divergence and then following the corrective uptrends through that corrective phase, that second phase. And then I do some Fibonacci levels, and I'm studying where the price falls to. And what I found was that there is a relationship between the height of the first leg and the low of the third leg, and it is as you can see, at the 161.8% retracement level. And that's a big drop. So when we fell from about 480 down to 411, there was actually a smaller measured move down in here. And you might be able to see that too, that there's another fractal in here that I'm not even putting on this chart because it would be too cluttered. Anyway, so in those first two measured moves down, we reached that 161.8% retracement level. So you have a small one through here, another one here, and then we've got another one here. So there's at least 3 measured moves down. And we're now on this 4th fractal, which seems like a lot. I'm not sure if we're going to complete this one. The more of these fractals you get, the less likely they are to continue to complete, I believe. I say that simply because the odds of reversal go higher as the move continues to make larger and larger moves. But this target off of that leg was reached with astounding accuracy right down here. You can see these 2 candles. We had one close below that 161.8% level at $367. And then we had a high wick candle of indecision and a gap up and a reversal. Corrective. It was all corrective. Whew. So in this bigger measured move down, this first leg's much taller, starting up at the high of the market, the all-time high, up towards 480, coming down to the yearly low near 363. And so what is the 161.8% extension of that first leg? 289. Dear God, that is low. And that's why I say I don't know if we're gonna actually reach this, because that is lower than that's lower than my expectations, and I'm pretty bearish. So maybe we don't quite get that far. Maybe we can actually turn on some other levels here, like well, maybe not 1 point, I guess. Geez, is that really the next? That's the first extension we look for? Brutal, right? Brutal. So this could be horrifically scary. And phase 2 here is pretty short. I'll start phase 3 wherever we break this uptrend, because these uptrends are the signal. You break this uptrend, you go in for a new low, and that's just how it goes. So I've got this all labeled out, and I kind of just ran over all of these things. If I zoom in here, I can break it down a little more, make this make sense. There we go. So there is some bullish divergence through here, right? And this one, I think this is a good example. It doesn't happen right on 30. It happens at 32, and this is okay. What's most important is that the RSI doesn't break above 50. So you can tell there is kind of like a top in here, a double top. And then it busts, and the RSI pushes higher with the price in this corrective phase. And we have an internal trend line that forms, and I have that shown by this solid green line here. And as this trend line breaks, that is a signal to target the next uptrend. And this is the true external trend line of the uptrend. So this long dashed green line represents that. Of course, the price breaks through, hangs onto it, falls down, breaks down, right? And now we find ourselves in a position where we've had another instance of bullish divergence, and this one occurs on the weekly time frame. And off of that bullish divergence, we've had a rally, and we have that internal trend line shown in the solid green line here. And we've broken through that, and sure enough, we've come down, and now we're testing the true external corrective uptrend. So breaking through this next week, that could happen. And if it does, oh my goodness, we're definitely going to go look for at least 371, and then we'll figure out shortly whether or not the market's going to go into an actual steep, scary bear market. There won't be any questions at that point whether or not the market's in a bear market. So let's go to SPX really quickly too. Open this up, and yeah, you can see I've got a lot going on here. And on SPX, I'm thinking, you know, hey, even 2,100, 200, that's pretty low, right? But let's get off of that. Let's go to primary plus, and let's go out into the monthly time frame. And let's talk about this. So I'm thinking we're probably going to come down. Is this wave 3, wave 4 ends? Wow. Yeah, so it could get really bearish. I mean, I'm hoping that we stop in this corrective uptrend here. That'd be great. In this corrective downtrend. And hit this uptrend support near 2600. I mean, this is really bearish stuff, And you can see that, I mean, the RSI on the monthly time frame hasn't even begun to reach oversold like it did back in 2001 and 2008, right? So we haven't really had a major correction. We had one of those in 1974 where we saw the monthly reach oversold, and it's been a long time. We could have a long way to go. Look at this massive bearish divergence on the monthly time frame. Here you have a peak in the RSI and a much lower peak in the RSI as the market's setting all-time highs. And that's why I'm expecting such a dramatic move. It's just because of the overall length of this run has just been incredibly overextended. And we know a lot of that's been through financial monetary loosening. So let's talk about gold futures for a minute here too. I've been following gold pretty closely, and it's not going my way yet. So here we see a bearish or a bullish doji star. It's unconfirmed, and this is, if confirmed to the downside, this is typically a bearish continuation, and to see this on the monthly doesn't make me happy. But I do like to see that we had a touch at support and resistance and a bounce, and that the RSI is flat at 46. This could be a spot for reversal, and that would make sense because I'm looking for this corrective 1, 2, and 3. Of course, this could develop into a motive wave. The only rule is that this decline from that point A can't pass the start of that leg, and it hasn't on the weekly time frame. You can see that A and then B just keeps finding new lows, and we seem to be reversing that now. Implied volatility is starting to rise, which I don't quite like as the price is dropping. RSI here, if it can pull higher, that'd be great. Let's see, what is that? It wouldn't be bullish divergence because the close isn't lower. So this just could simply be listing sideways too. That's okay. I am still at least expecting a push up to C. To complete an ABC correction from that motive wave down, which took a long time. So this would be a good spot to reverse given the price levels. I think if we come out here and zoom in, you can see that the price here closing down towards this same range here. So we might have some bullish divergence here. Of course, see the RSI travel so far beyond 50 before coming back down. Is a little sketchy if you want to call that bullish divergence. It is most important though that we didn't reach overbought. So to me, this looks like a great potential double bottom, and it's not confirmed yet. It won't confirm until we pass point A. But we do have a channel that we've seen interrupted as we have a corrective push higher occurring. And this happens in VIX too, actually. This is pretty common because motive waves occur in channels, and when you have reversals, you tend to get like at the medial line there. You see how there's a floor? You tend to get these little floors, and then boom, that stops the channel's progression. You get these reversals. Here you see A, B, and C pretty cleanly, and it looks like we have 1, 2, and probably starting an extension. 1 of 3, 2 of 3, looking for 3 of 3 to push VIX much, much, much higher. Then 4 and 5 of 3, completing that 3-way will probably bring us into overbought. What I'm saying is that VIX has found a corrective push higher, has regained an uptrend, and now appears to be moving into a third wave extension. That was something I mentioned a couple weeks ago as well. And if that happens, we can definitely expect a lot of volatility in the stock market for equities to fall. So the long and short of it is, it's getting rough out there, and the conditions to really bring in this century-long correction is coming. You can see my account is here. I am holding red, and that's because a lot of my holdings are precious metals equities. And so I was early, and I'm being punished for that. I do know myself pretty well, though, and trust my analysis. I don't think I'm going to be wrong. I think that I was just early. That happens a lot. So I'm not panicking, not yet. I'm just calm, cool, collected, but also I am kind of scared. Scared. This is not going to be a good experience. I think we're going to have a lot of uncertainty. People are going to get wrecked. I didn't even talk about AMC, did I? But the thing is, honestly, I'm kind of done with this. This AMC has been quite the story. And this looks like a half-staff tilted formation through here. you know, it's the same story here. Like, okay, so I had this drawn tilted upward, but if I tilt this flag back here down like that, I mean, this looks like the same story to me, where you got another flag through here. It's a half staff tilted formation coming off of that major downtrend where you had 1, 2, 3. Look, I think this is the same move. And if the market's dumped, that's just going to confirm as well. So I'm waiting for that downward breakout. I'm just waiting for it. I'm sure it'll happen soon enough. Here you have Ape also looking quite bearish. So I think that completes wave 4. I'm looking for 5. AMC and Ape both looking like they're going to come down now. Energy looking like it wants to come up. But let's talk about crude oil. Can I type? Is there something wrong? Let's go for crude oil. I'm not really sure what to do with crude oil at this point. It is very difficult to say. It does look like we've gone through 1, 2, 3, 4, 5 waves, A, B, C. This could be the end of a correction, and we're looking for a new motive wave higher. I do understand that if the price does break down, it's going to fall hard. But the only thing I can really say about crude oil right now is that the next move is going to be big. It's going to be big, and will it be down? That's very difficult to say. I'm just gonna guess that it's not. I'm just gonna say that energy prices are probably not going to start coming down, and that CPI will continue to rise. GDP may begin to shrink, and we go into an actual recession. So it's just buckle up, know where your stops are, be safe, and as always, happy trading.